I think there's a lot of headlines right now. There's a lot of noise about Jerome Powell and the rhetoric coming from the Trump administration and Pulte and Bessent and others about what he should be doing. But look, if I just look at the data, if we just look at the facts, to me, there's no question at this point. And even Jerome Powell has said, we are in a restrictive monetary policy right now. And I believe that it made a little bit of sense. I could argue to continue with that until we saw how these tariffs played out. I think we have enough data now with everything going on that it's time to start stepping down rates. I think I mentioned a really great conversation that I had with Barry Habib, where he was saying he feels strongly that we're about a point higher than where we should be to be at a neutral stance. I feel like I align with that. It's at least 50 basis points lower than we are now, if not 100. And there's quite a bit of data to back that up. We need to start making those moves to get to this to this level. And I think when that starts to happen, you guys, these headlines about sales slumping, rates ticking up, and refi applications slowing will start to turn around. So look, I know for all of us in the mortgage and real estate industry, we've been on the edge of our seats for, 2.5 years now, anticipating that we would see some reprieve in interest rates. And I got to say, I don't want to sound like a broken record or a clock that's right, twice a day, but I do feel like we're on the precipice of seeing the improvement in rates that we've all been expecting. We had to get through this tariff stuff. We're not completely through it, but the early indicators are that although there is a little bit of impact on inflation, it's not significant. And as we've talked about before, keep in mind, tariffs do not create long-term inflation. It would be, a short-term event. Tariffs are implemented, and then, inflation, as a lot of people I think lose sight of, is not what things cost over time. It's the increasing cost of things on an ongoing basis. So once inflation happens, then as you continue, if prices don't rise and don't continue to rise above that level, then we don't have inflation at that point anymore. Now, it doesn't erase the inflation that we already had, which is why things at the grocery store still seem super expensive because of the previous inflation we had. But the Fed's not looking to unwind that, and you really can't unwind that. We just need to slow that level to the 2% target, and all indications are, to me, that we're there, and that and that we're going to continue to see mild inflation as we move forward.